Howdy, and welcome back to the Mortgage Musketeer. Today's a beautiful Saturday morning, and I'm going to be talking to you today about the 4 kinds of loans that most people will get to finance a home. Intro. Okay, so the 4 types of loans are your conventional, your FHA, your VA, and your USDA loans. Now, people ask all the time, well, what's the better loan? The best loan is the one that lets you buy the house, period. All right, because not everybody qualifies for each one of those types of loans. So you have to understand that. The only time where it's like, well, which is kind of better is depending on your down payment and what is your final payment, because sometimes mortgage insurance and interest rates can vary depending upon what your debt to income ratio is and what your credit score is. So it's not an easy answer to say, well, this is the best kind of loan. You have to actually take a look at all the different loan products and figure out, hey, what is the best loan that I can do for my client? And that's what the loan officers are supposed to be doing. They're supposed to be working in your best interest and kind of help you figure out what is the best loan, most importantly, that you can close on your home and be done and be happy with your mortgage. So that should be a educational experience. The loan officer should be giving you some information and some education and some guidance and kind of walking you through the process. So here are your loans. First and foremost is your VA loan. So your VA loan is a fantastic loan, but it is strictly for veterans. So if you're a veteran, that's a loan for you. If you're not a veteran, it's not going to happen, so we can set that aside. If you don't have much money for a down payment, there is an opportunity for a USDA loan. You'll also hear it called rural housing, right? So this is a really good loan, very, very difficult to get into. It's designed to help people that are trying to get into a home maybe for the first time. They don't have a lot of assets, they don't have a lot of money set aside in the bank, but they make plenty of income. It is a really good loan, but I have found that the people who need it most are the ones who rarely qualify for it, because it's like threading a needle. Because there's 2 types of income. There's an income cap that combines everything that you have and all the income of the people that live in a family, and that's by zip code. So you actually have to look it up. And then there is qualifying income, 2 completely different things. And then you have to fit this narrow window of a debt to income ratio. And there's a lot of other factors that go into it. And the house has to be in a rural environment. In other words, you're never going to be able to do a USDA loan in the city. And you have to know that a USDA loan, you actually have to look it up, because I've literally seen one side of a street qualify for USDA financing and the other side not. It's just how these boundaries are drawn. So your loan officer needs to look at that. That's one of the questions that the real estate agents actually should be looking at too when they list a home. Is it USDA eligible? It's a great loan. We'll talk a little bit more about it, but it has reduced mortgage insurance and you can get in with 0 down. The next loan that we'll talk about is your FHA loan. So your FHA loan is a federally backed loan, and it's another great loan. And typically what it does is allows you to have a little bit of a higher debt to income ratio and a lower credit score. So it's federally backed, so it follows federal guidelines, and there's a whole the automatic underwriting system for that takes into a lot of things into account. It's a little bit more forgiving. You can be 3 years out of a bankruptcy. There's all kinds of kind of relaxed guidelines in a way, because it is federally insured. But part of that insurance is the mortgage insurance. So you have right now, as of this video, you have an upfront mortgage insurance of 1.75% and then 0.85% a month if you're putting 3.5% down. And that's the other thing, is it allows you just to put 3.5% down. You don't need 20% down. You don't need 20% down for any loan. And that's a big misconception. If you don't put 20% down, excuse me, if you don't put 20% down, then you're going to have some type of mortgage insurance. The other loan that people oftentimes want to get into is a conventional loan. And a conventional loan is exactly that. It's your standard conventional loan that you can put 20% down, have no mortgage insurance, and that's typically what people are trying to get into. People that have an FHA loan with mortgage insurance only put 3.5% down. Most of the time, they are going to try and refinance somewhere down the road, especially when they reach a 20% loan to value. That way they can get rid of the mortgage insurance and reduce their payments. So that's kind of them in a nutshell, and we're going to break down each one of those in greater detail. But understand that the two most common are your FHA loans and your conventional loans. And people say, well, which is better? Depends on the person, the one that gets you into the home. Now, there is a point at which those two loans, it really is a matter of, well, which is a better loan, FHA or conventional? And that has to do with your credit score and your debt to income ratio. So somewhere around 680 and below on a credit score, you're going to start getting beat up pretty good on your interest rate. And your mortgage insurance might be higher. Okay, so it's a combination of interest rate and mortgage insurance. Same thing with the FHA. The higher your credit score, the better your rate's going to be, but the mortgage insurance is flat. So you really have to compare the two, and and every loan is different. I have seen it where a conventional loan, at a little bit lower is actually better than an FHA loan, and vice versa. So you have to actually look at the numbers. The other thing is that sometimes a conventional loan, you're just not going to get approved. The automatic underwriting system is just going to, I had a 680 something credit score that I ran every which way I could. I ran it both Fannie Mae and Freddie Mac. I did I did everything I could, and just would not qualify. So the best loan for them was an FHA because it approved. Okay, so it get them into the home. And then they could work on some of their layered risk and fix some credit stuff that they had going on, and then once they do that, they could refinance down the road. But there's nothing wrong with an FHA loan. It's a very, very, very good product. All right. Okay, so I hope this was useful so you understand the different products. You have your VA loan, your USDA loan or rural housing, you have your FHA loan, and you have your conventional loan. And those are the four. All right, so those are conversations that you'll have with your loan officer. Most of the time, they're going to just jump right into FHA or conventional. The first thing they need to do is pull your credit, because that's the only way that you can know, because they're going to pull in your debt and it's going to pull in your credit score. And that's what we need to know, which loan product that we can fit you in. All right, if you liked what you heard, please subscribe to my channel and ring that bell so you know when the next one is coming. And it is all for one and one for all.